welcome to Leaders of Tomorrow, 18 Hours special initiative that celebrates the undying entrepreneurial spirit of micro, small and medium enterprises. It is our endeavor on the Leaders of Tomorrow to bring you the most relevant voices when it comes to the MSME as well as entrepreneurial space. And tonight, it's our privilege to bring you this special and exclusive interview with Arundhati Bhattacharya of SBI. Tonight, we're featuring part 1 of that special conversation. Take a listen. Ma'am, thank you very much for speaking with us here on the Leaders of Tomorrow. It's a pleasure and it's a privilege to have you on the show. Let me kick this conversation off by asking you to talk to us about some of the products, some of what you have in terms of offerings for the MSME, SME and entrepreneurial segment.
Well, we have the whole range of products. So in case they need loans, we have term loans, we have working capital loans. We also give loans for, say, dealers, where we have tied up with the industry majors. Similarly, for vendors, these loans, the dealer and the vendor financing, it's all on a technological platform, which makes it very transparent and very easy to operate. We also give things like asset-backed loans, where if you have assets, you can take loans against those. We give collateral-free loans, where we are able to get the guarantee from the CGT MSE. So up to 1 crore limits, we can give collateral free loans. So the whole basket of products is actually available for SMEs and MSMEs. And today, in view of the government's Stand Up India program, Make in India program, all of these have sort of the Mudra loans. They have all dovetailed into these products that we already have. In the Stand Up India program, we would be giving loans from 10 lakhs to 1 crore for at least one woman and one person from the backward classes in every branch. And that is the target that's been given to us. We are confident of meeting that target. And of course, you know, there are the Mudra loan disbursement targets also. So those two we are working on.
SBI is the first one to have pioneered setting up of branches and banks specifically targeted at entrepreneurs. How's that going?
That's going very well. The SBI Incube in Bangalore, which we have set up only to help the entrepreneurs, that already has, I'm told, 200 plus entrepreneurs working with us. Currently, we are trying to make a program whereby we will celebrate at least one entrepreneur per month, so as to showcase how they have gone about doing the work. As you know, these branches are mainly in order to help the entrepreneurs do the things peripheral to their main activity, meaning entrepreneurs normally have a very good idea about what they want to do. So the idea is theirs, the technology is theirs. They are also good at raising finances from various venture capitalists. We are not financing them because it is still in the purview of the venture capitalists when they are just setting up. But subsequent to that, they do need a lot of help getting the rest of the administration right, meaning how do you do a business plan? How do you get your business registered? How do you ensure that all the tax matters, etc., are in line with what you need to do? How do you know that legally you are doing the right kinds of things? So these are the kinds of things that we help them with. And till now, we are having quite a good response there. Depending upon this response, we are now thinking about opening a few other branches in those parts of the city, or rather those parts of the country where we are seeing a lot many entrepreneurs actually setting up units.
I was just going to come to that. For the sake of our viewers, can you help them understand, how soon we could see those, or any other details you can share?
Maybe within the year we will have at least 2 to 3 other branches. And I think the areas that we are looking at, one is Pune, one is Noida, and maybe one other somewhere in the south, whether it be Chennai or Hyderabad, we will look at it. So I think these are the 3-4 areas where we are looking at getting these branches.
Okay. You made a very important point that seed finance is essentially something that, venture capitalists essentially take care of. At a time when the government is aggressively pushing Make in India and Startup India, do you think, with alternate modes of finance like crowdfunding gaining more traction in India, do you think that's a segment that the bank should also look at? Do you think that, the banking industry is possibly losing out on investing early on in entrepreneurship?
See, banks normally, will have a small fund that they will set up in order to support entrepreneurs. We ourselves have set up a small fund to support fintech companies. But over and above that, I do not think this is the remit of banks. Commercial banks don't normally get into angel investing and venture capital investing, because there you have to have a much greater risk appetite. If you are actually funding 10 companies, you can expect only one company to do well. Commercial banks, because they take money from the public at large, I do not think they have that kind of a risk appetite. In respect of venture capitalists and angel fund owners, they normally take money from those who have the ability to lose money. Our depositors have no ability to lose money. Therefore, for us to get into venture capital or into angel funding, it's not possible. What we do is, out of our profit, sometimes we keep aside a small amount, say 100 crores, with which we would like to look at helping out many of these fintechs, especially, who are into doing things which could actually be of interest to us in our own organization, in our own work. So in order to support those kinds of people, support them in doing things like the pilot study itself, support them in doing the POC, the proof of concept. So for things like that, we have kept some money, but not actually for funding their entire growth cycle.
Could you elaborate more on this fund that you're talking about? So you set aside essentially a fund, and like you're saying, you invest. It's like a startup fund within SBI where you invest into companies. You're saying specifically in the fintech space. For the sake of our viewers who are interested in this fund, want to know how they can work more closely with SBI, could you elaborate?
Actually, the way that we would think that they could work more closely with us is to approach us with the kind of product they have. As you know, we have a DMD CIO, Chief Information Officer, as well as a Chief Technology Officer. Their emails are available on our websites. They should send their concepts to them, ask for an interview so that they can actually come and showcase what they are doing. And then if it looks like something that might interest us, then we definitely can help them to do a POC or a pilot, and then take a call as to whether this is something that we'd like to collaborate with.
Okay. Ma'am, you were previously talking about the loans which are available under, say, the Mudra Bank. SIDBI has the SMILE scheme. You work very closely with the entrepreneurial community. But we have a call-in show on the Leaders of Tomorrow every week, where a majority of entrepreneurs who write to us say, how do we access these funds? Where do we go? Whom do we contact? So there seems to be some lack of information really on the part of the entrepreneurs who don't know how to go about accessing these funds. How do you think that can be addressed?
Actually, the main thing that happens is, when entrepreneurs come to us, they don't come to us with the right kind of documentation. And the biggest documentation that is required is a business plan. So how do you go about making that business plan is something that they need to understand. Again, our InCube branches actually handhold people into creating this business plan. So a business plan will basically tell you what is the amount that you need to bring in order to do the business that you want to do. So if you have an idea, then what is it that is required in the form of investment, and then they need to indicate that where that investment will come from, how much will be required from the banks, how much will be brought in as equity. And I think in India the biggest problem is equity, because our people, while they have very good ideas, they are very good in technology, they are not resource rich, they are not equity rich. So basically people will take loans from their parents, from their friends and relatives. Maybe if they are able to convince the venture funds or the angel funds, they will get money from them. But the fact of the matter is, wherever you get money from, that is important. Because without equity, a bank can give a loan only when there is a certain amount which is shown as equity. Okay? So once you have all of these things in place, that is, you can show where your capital is coming from, you know what is the business idea, you can tell the bank where you have set up, who are going to be your employees, how are you going to get them, what is going to be your initial investment for plant and machinery, or if it is not plant and machinery, your working expenses. Once you have been able to show that, and then you have been able to show what is it that you are wanting to achieve, how many years will it take for you to get the sales in place, and then what is the profit margin that you will have, so as to enable you to have something for yourself as also to service the loan. All of these components, if they are there, then there is really no difficulty in getting loans. Again, as I said, we have a large number of SME branches. If you go to these branches, you will be handheld in actually putting together a business plan so that you can look at accessing the loans. Banks every day look for good customers. Okay? It is one of our biggest challenges to get customers who are good, who are really and truly committed to making a go of their business. Therefore, banks are all the time searching for good customers. It is a question of getting this connect and then coming in and proving that you are responsible enough and you are committed enough to actually do this business properly.
Let's take a very quick break then on the leaders of tomorrow, but don't go anywhere. We'll bring you the rest of that conversation on the other side. Welcome back. You're with us here on MSME Dialogues on the leaders of tomorrow, and I'm in conversation with Arundhati Bhattacharya, the chairman of SBI. Here's part one of that conversation. So if there were top three things that you would advise our viewers in terms of financial advice, what would it be?
Well, top three things in respect of the financial advice is, first and foremost is, it is very comforting for banks if you have already been doing the business for say about 2 years. Okay? To give a startup money is very, very difficult because it's an unproven case. We are not into venture capital funding. Okay? So if you have been able to do a business for 2 years, if you have been able to make a profit on that business, and if you are able to show us the linkages, that you are aware of them, where you get your raw materials from and where do you sell, that you are aware of the entire linkages and the challenges that are there in actually running this business, it will become very much easier for us to then give loans.
Okay. What would your advice be to our viewers who tell us that they're family-run businesses, and as family-run businesses, they say that they face some concern from the banks when they approach them for funding, saying that essentially concerns being raised in terms of being professionally run. So, is there a dichotomy in your mind in terms of family-run and professionally run, and what advice would you have?
See, the fact of the matter is, we don't have a dichotomy about family run or professionally run. For that matter, in India, we have always had family run businesses. And if you look at our portfolio, lots and lots of the big guys are all family run businesses. But the problem that happens is, if you have a family run business and you are taking a bank loan, you must still have corporate governance guidelines. You cannot behave as though it's your own jagirdar. Okay, so you take out money whenever you like, you put in money whenever you like, you do whatever you like, doesn't work. Okay, so what we need to understand is that even if it is a family run business, are there people who understand the business and finance? Okay, so if there are people who understand finance, if there are people who understand that there are certain rules that govern business, then we have no problem in giving money to them. But if you are a family run business and you don't have a professional who understands finance, you don't have somebody who understands the technology, and you believe that we can give you funds, it doesn't work. Because at the end of the day, whenever I am giving funds, I am responsible to some others that I am giving the fund in the right manner. So for family run businesses, I think 2 or 3 things are very essential. First and foremost, they have to convince the banks that the people who will actually be doing the business are people who understand what they are doing. Second, that they will go by the accepted norms of business and they will not be informal about the way they run business. As I said, somebody in a family run business, they need money for spending at home, they suddenly take out money from the business and then suddenly they will put in money from the business from God knows where, These are not things that can be acceptable. And if you have the right corporate governance, if you have a good auditor, if you have a good professional who looks at your finances, family run businesses are equally welcome.
So how do you suggest, and what advice would you have in terms of building a robust, professionally run company for our entrepreneurs?
See, first and foremost, as I said, you must have a very good auditor. We prefer people who have a good auditor, because that gives us a little more confidence in the numbers, okay? And also, you know, certain professional practices. For instance, you will find in some of them that the auditors, they continue forever. They are there for 16 years, 20 years. That again gives no comfort. Like everything else, auditors also should be rotated, say at every 3 years or 6 year terms. So they may have 2 terms of 3 years and then they should get rotated. Second thing is, if it's there should be people on the board who are outsiders and not only family members, okay? Because then the outsiders can actually bring in a lot of knowledge and wisdom from the outside. So they will be able to give you the point of view of the market and not necessarily an internal point of view. So it's good to see good people on the board. So good professional people on the board, a good audit firm, and thereafter of course professional qualifications of the people who are running it themselves, so that we know that they understand the technology and they understand finance. If all of these are there, I don't think there are any issues. One needs to keep building on them. Believe me, in business, everything relies on trust. You have to create that trust. That trust doesn't get created on its own. And for creating the trust, you have to have these kinds of things which will automatically generate the trust with the banker. The relationship with the banker is like that of a physician. Just like if you are unwell, you would not keep back something from the physician. So also a business must come back to the banker as soon as they find that they are having some difficulties. Because if you do it at the very beginning, very often you will find that we can immediately give the right kind of solutions so that the weaknesses can be addressed, okay? But if you leave it too long, it's like cancer, it spreads, and thereafter there are no ways other than to classify the account and to call it a non-performing asset. So, you know, the trust has to be built between the banker and the business person, and this is very, very fundamental to the running of a good business.
Let's talk about what's happening in the industry from an NPA viewpoint. Have the NPA troubles for the industry hit lending from an industry level to MSMEs?
See, the increase in MSME lending has still happened in spite of the downturn that the economy has seen. Our numbers, if you look at March 2014, was around 1,75,000 crores. That has gone up to 1,89,000 crores in 2016. So the numbers have increased. However, yes, they may not have increased at the pace at which it would have been, you know, it would have been found reasonable or acceptable. So the CAGR is actually below 10%, well below 10%. One of the reasons, of course, is that we have written off a lot of accounts. So, you know, there is a base level fall as well, as the books have got cleaned, and therefore to make up for that and then improve, that has taken some doing. The other thing is, as we have seen more NPAs happening, thereafter the credit underwriting standards have also become more stringent. So we are doing more stuff like your dealer financing, vendor financing, where there is a lot of clarity and transparency as to where the money is being used and how it is being used and how it is being repaid. Balance sheet financing, which we used to do a hell of a lot, we have actually come down on the balance sheet financing, because in many places we have seen that the balance sheet numbers are not reliable numbers. And that is where I have been saying that you need very good auditors to give us that comfort that the numbers that we are looking at are actually the numbers that are, you know, that are there. Because if the numbers are not the right numbers, then the financing that you do on it is not going to be, you know, it's not going to come back to you. You are likely to run into more heavy weather. So obviously, you know, our due diligence, etc., has also become a little more stringent. We have been reiterating and iterating whatever we are doing there. and that may have caused a little bit of a slowdown. This is, however, normal. Whenever there is a spike in NPAs, it is normal for the banking sector to slow down, to consolidate, and then go forward. So I think the reaction from the banking sector has been very normal. It's not been anything over much. We have tweaked our product categories. We have strengthened our underwriting standards. We have ensured that our people get a lot more training. So all of this has happened. And with that, obviously, you know, there are some issues on the MSME funding piece that we are trying to rectify.
That wraps up part 1 of a special conversation with Arundhati Bhattacharya, but we'll bring you part 2 tomorrow. Do stay tuned for that. In the meantime, if you want to write in to us, do remember the email ID is leadersoftomorrow@timesgroup.com. You can reach us on social media using the hashtag LOT, or you can call us on that number which is on your screen. Thanks for watching.
How exposed you are to either exporting your goods or inputting your inputs, okay? So if you are very exposed to any of these two, then yes, you do need to have some understanding of the global headwinds. If you're not exposed to either of these two, then to that extent, I don't think being in this country, you should be very concerned.